Hello and welcome to Skills to Pay the Bills and today's segment of The Real Secrets of Money. Our co-host today is Ms. Shirley Luu, Executive Field Chairman of First Financial Security, Inc., and our special guest today is Mr. Bobby Lee, Area Marketing Director for First Financial Security, Inc. Shirley, everywhere I go, people are asking me, do you have an IUL? I have an IUL. IUL. What is an IUL?
Well, an IUL is a new form of life insurance. It's called Index Universal Life.
So it's new, okay.
Absolutely. It is a new. When you think of traditional retirement and life insurance, the old way is that most of the time you got to die for someone else to benefit.
That's true.
So therefore, a lot of folks kind of turn away from looking at, well, I don't want life insurance. Well, this new kind of form of insurance, it is a life insurance, but it's a unique insurance program that it allows you these three unique things. If you die too soon, it does become a death benefit because it is a life insurance.
Okay.
But if you live too long, it becomes a retirement income that gives you a distribution of retirement that you can never outlive.
Wait a minute, never outlive it.
That is correct. In addition to that, think about this, Tia. If you live too long and dying too soon, what if you get sick in between? Being disabled, long-term care, chronic illness. Well, imagine you have a policy that covers if you're sick in health at the same time, long-term care. That's
so it's like 3 in 1.
3 in 1, that is correct.
Wow, that's fantastic.
Absolutely. And the uniqueness is that a lot of people out there today, traditionally when you think of in terms of retirement, what do? Put in a 401k, you know, or the traditional plan of TSP or 457 all. But can you imagine, I mean, we're in a situation where a client had saved money aside in an IUL, and next thing you know, she saved $200 a month because she was using it similar to a 401k, where she was saving it. But what happened was that after a couple months into the policy, she found out she had breast cancer.
Wow. Because
of the breast cancer situation that she had, she was able to get in touch with her accounts and be able to withdraw out $106,000 that she can utilize while she's alive. Now think about it, if you had a 401k and you put in $200 a month, and if something happened to you in a critical crisis, can you take out $106,000 or what do you get, $200?
Well, I was gonna ask you, did she have this policy a really long time in order to have that amount of money in the policy?
No, the uniqueness is that she only had this for a couple months, and yet she was able to tap into it. And so that's what makes the product so compelling, and you know, you utilize while you're alive. And you know, and Bobby here with me today is going to probably go into a little bit more further details, what really makes this unique situation as retirement. And by the way, the stuff that Bobby and I will be talking about today is not something new. As a matter of fact, recently, as much as Time Magazine went on national television and said, hey, you guys, you know, it's time to retire your 401k and rethink about how you do investment today and put it into a product that's as compelling as this that gives you a guaranteed retirement. But how would you like that retirement become tax advantage, tax-free?
Oh, wow, that's very important about the taxes. But as you were talking, I was thinking, this is IUL is something new. What did it replace, Bobby?
Well, you know what, the IUL, it basically replaced the old product, like say term, where you pay for a certain period of time, and then if you don't die, you lose all your money.
So does this mean we don't have term anymore, or are there
well,
still
it's still around. I mean, these are the old products.
Right, it's just a better
the better product
upgrade.
is the IUL.
Okay.
And you know what, a lot of time you go to work and you get a group term from your work. Yes. A lot of people don't know that once you leave the company, it becomes a decreasing term. Right. So it may be worth a couple $100,000, but when you leave, you're lucky if you get $15,000 out of the policy.
Right. I mean, I have a testimony on that when my poor mother worked for the government for years, and you know, she thought that she had $150,000 in that policy, and when she went to OPM to check on it about 4 years ago, she had $4,500 left in that policy, and because of what you just said.
And you know what, the unfortunate thing is a lot of people are not informed, and you know, that's why we are all, you know, like in front of churches, companies, organizations, even, you know, individuals, educating, you know, how all these policies work, educating on, you know, the real secrets of money. you know. And another product, old product would be, say, a whole life. Whole life policy, they can guarantee you a small amount of return, but the premiums are not flexible. You have to pay the same premium every year, and there's just the cash value, a small cash value in there, and then you have the universal life, which gives you about 6%, and you have variable life. And with a variable life, your money's in the market. So the market goes up, you make money, market goes down, you lose. Now, with the IUL, it's basically a hybrid account. It's a hybrid life policy that gives you lifetime tax-free income. And that's the beautiful part about this product, is that it's not only just life insurance, but it will enable you to have a retirement income when you need it.
Wow. Now, is this just for, say, people that are 40 years old and above, or is it age specific as to who can have this type of policy?
With these policies, you can have it for a newborn baby.
Get out of here.
One day old.
Really?
And it's a way that you can even save for their college planning. Or a 25-year-old, 35, it doesn't matter. There's no age restriction.
So if you're saving for their college planning, and it's, say, 17 years later, is that going to be a taxable item?
Well, because this is an insurance policy, anything that comes out of it is tax-free, as long as you follow the guidelines of the policy, okay? Wow. As long as you don't overfund it, okay, and make it into a modified endowment contract, okay? Then everything that comes out of the policy is basically tax-free.
So it sounds like you guys are really big into financial literacy, making sure that people, because I think a lot of people just don't know about it, as you said. They just haven't heard about it.
See, what I find is a lot of time when I sit down with my clients, the only thing they know is, okay, I go to work, I put money into a 401k, and hope for the best, and hopefully the company matches. But a lot of people don't understand that the 401k, when you put money into it, yes, you can make some money if the market goes up, but you can also lose, right. Okay? And let me ask you, 2008, do you know anybody that lost money in their 401k?
Please. Do I ever?
See,
let's start with me.
Well, for that reason, we educate people that there's other options versus just the 401k. Because if you save your money for retirement, 30 years later, you've got $300,000, okay? When you want to take income out or you want to withdraw it, the government's got to take 1/3 of it, taxes. Now, if you had $300,000 in IUL, you can take a lifetime income out of that cash value for the rest of your life. Versus the 401k, you have to take it out, but you have to take a larger amount out, and then next thing you know, it runs out.
Well, Shirley, that doesn't sound like that could be true.
Well, you know what?
It just doesn't. I mean, it just sounds
how
like fairyland.
How about I show you an illustration?
Yeah, you got to do that for me.
And
that's what I need to see.
This illustration is based on 8% return, and it's hypothetical. Okay, so in this illustration here, a 35-year-old putting away $400, okay, will get $500,000 in death benefit, okay? But as you can see in the second column, he has a cash value built up, okay? And once that cash value built up, he can access it anytime he wants, okay? If he needs to buy a house or he needs for kids' college, he can access that money tax-free, and he can take it out as a loan, okay? Now, with those features, we also have the feature of the lifetime income. And as you can see, when he turns to age 65, he's withdrawing about $58,000. And it's because if his cash value is about $400,000,
whoa,
okay, he can take $58,000 for the rest of his life to age 120, tax-free. Now, let me ask you, if you had $400,000 in your 401k and you wanted to take $58,000, you have to probably take out about $70,000. After 5, 6 years, your money runs out. But this policy will allow you to have this income for the rest of your life, tax-free.
Well, it brings up something else to mind. Let me ask you this. Supposing something happens that's a little traumatic in this person's life and they need money before they're 65. I know that with 401ks, there are all kinds of restrictions on that if you're not a certain age. But in this case, I mean, would he be able to, or he or she be able to take any money out?
When he has cash value in his IUL policy, he can take it out anytime there's no restriction. He takes it out as a loan, okay? And there's no taxes or anything like that.
Wow.
I mean, it's like having your own bank and borrowing from your own bank.
Wow.
But if you did that with your 401k, there's a penalty for early withdrawal and there's taxes.
Right.
So you may be paying about 40% in penalties and taxes when you're withdrawing that money.
But there's one thing about the loan that Bobby should add, that in a 401k, if you take the money out as a loan, you have to pay it back. You have to.
You have to pay it back. That's true.
In an IUL, you don't have to pay it back. Now, why is that? It's because eventually one day you're going to kick the bucket. And when you kick the bucket, the loans are paid off at the time of your death. Yeah.
That's amazing. That's absolutely amazing.
Yes.
Well, it is time for a short station break. We will be right back with our co-host, Shirley Luu, and special guest, Bobby Lee of First Financial Security. Don't touch that dial. We'll be right back.
Hello, and welcome to Skills to Pay the Bills. I am Michelle Overton with a very special announcement. Give your teen girls the push they need to become successful women. Ensure that they attend the 4th annual Loving Me Girls Conference on Saturday, March 16, 2013, from 9 a.m. to 2:15 p.m. Join the DC Metro chapter of the National Alumni Association of Spelman College for an amazing day of engaging workshops on beauty, leadership, and sisterhood. The Loving Me Girls Conference is free and open to girls in grades 8 to 11. Only 50 spots remain. Visit the website to register. And don't forget to watch Skills to Pay the Bills.
Welcome back. You are watching Skills to Pay the Bills, and today's segment of The Real Secrets of Money with our co-host, Shirley Luu, and our special guest, Bobby Lee. I have a question, Shirley, because today everybody is concerned about scam artists and guarantees and not having guarantees. Based on the things that Bobby just finished sharing with us, do the insurance companies put this in writing? I mean, are there guarantees, or are you just taking, at face value and hoping that it comes out okay for you?
Okay. Well, to be honest with you, Atia, that is a very, very legitimate concern. Because people should concern where the money's going, and people need to be concerned before they do any kind of investment. They need to check out the companies, who's doing their investment and who's doing their savings, who's doing their life insurance. And one thing nice is that the company that we work with, affiliated with, are very, very young. They've been only around 168 years young. So in that regard. And the other thing is that people really need to understand that regardless what the markets say, the insurance company is one of the most financially sound companies out there. And today, not only that, before any insurance carrier can do any business in any particular state, they have to pass a very, very rigid laws and regulation by the state insurance commissioner that is issued by each state. So the company itself, number one, they can see on AM Best rating, Moody's and Best, and all those kind of things to see, okay, well, how financially sound are they? What is their solvency? What is their ability to pay? How much assets do they have? And believe me, when these insurance companies currently have millions of customers underneath them, I don't think the government's going to let something happen to millions of people.
Right, that's right.
So therefore, in those cases, and a lot of time, yeah, in some cases, when we say guaranteed, okay. In the IUL, for example, that Bobby talked about, well, if the market goes up, depends on the carrier that you work with, some of them you can earn as high as 14% gain with no downside risk. And even if the market goes down, they still give a guarantee, certain percentage.
Wow.
Now, when people say, well, how is that possible? How can you give a guarantee? So the question I would ask back is that, have you ever heard of a whole life policy?
Yes.
And does a whole life policy have a guarantee?
I guess your point.
Yeah, you understand? So how are you able to guarantee that? So the same way it works in the insurance business. Over here, you can give just as much guarantee, you know, like under the index UL, some carrier offer guarantee as high as 3%, where whole life's 4%, you know.
Right, that's right. Okay, well, Bobby, getting back to you, can you give us some comparisons?
Okay, I have this comparison, I call it a tale of two brothers, okay? Basically, in this comparison, you got two brothers, both 35-year-olds, have a family, and one is investing in the old way, which is the 401k, and the other one, because he talked to me, now he's investing in the new way, okay?
A plug for Bobby Lee.
So let's take a look at this here. You got brother A investing $6,520 in the 401k in Florida match at $1,050. And of course, he buys a term insurance for $680 annually and gets a $600,000 death benefit. Now, brother B, on the other hand, doesn't believe in the 401k anymore, so he invests $7,200 annually into the life savings account, the index universal life.
Yeah. Okay.
And he's got $600,000 in death benefit. Now, 30 years later, based on 8% return, okay, brother A has got $858,000 in his account, okay? He saved $65,000 in taxes. And then, okay, he did a good job,
pretty
right?
Good, yeah, that sounds good.
Brother B, on the other hand, only made $709,000 due to the fact that there are costs for insurance, okay? He didn't save any taxes because it's after-tax dollars, okay? Now, his death benefit went up to $864,000, whereas brother A doesn't have any death benefit because his term insurance ran out.
Uh-oh.
And in order for him to continue, he's got to pay $12,000 a year to continue his term policy, okay? So now let's take a look at when they're ready to distribute. Brother B, from his $79,000, he can get a lifetime income of $97,000 a year for the rest of his life to age 120. So if he was going to die at age 100, he would have received $3,395,000 and still left his family with $3,036,000.
And he didn't put that amount in there.
No.
Wow.
Now,
so what's brother A do? Move in with brother B?
Well, if you look at brother A, if he's going to withdraw $97,000 a year, he would have to take out $123,340. Why? Because of the tax implication, okay? So in 9 years, if he was going to take $129,340, his money's going to run out.
It's going to run out, yeah.
And that's where everybody is right now. It's not just about how much you save, it's how much you get at the end. And if you put in 401k, there's tax implication. You have the IUL, no taxes, and they give you a lifetime income, along with other benefits that Shirley had discussed earlier.
So IRS is going along with all this? They're agreeing with this?
There are guidelines within these policies, and you follow. If you invest into it correctly, that's the results.
Actually, there's an IRS code, section 7702, so anyone can look that up, and that way they can see, yeah, it's pretty neat, you know. Life insurance itself is considered one of the most last miracle, believe it or not, on tax advantage products that's available today to be able to do this. You know, and I mean, in one hand, the government do want you to try to take care of yourself, you know?
Right, right.
So they provide this vehicle at the same time to say, you know what, for those of you who's out there, I mean, I am sure that everyone you and I talk to, I mean, think about, you know, the people that's even doing this recording here. Imagine, you know, everyone's affected by it, you know, for them and their families and a brother or sister or co-worker. I mean, we just got to get the message out there, that's all.
Well, you know, just based on what you said, it seems like government agencies and other organizations, nonprofits, and all, would be running to the IUL. And, you know, you don't really see that happening. Is it because they just don't know about it, or they don't understand it, or what is the problem? Because people are they're continuing to lose money in their 401ks.
Well, you know what? I just want to add. Actually, there are companies right now today that are offering an index UL through payroll deductions. There's a hospital in Hawaii, and there are many other governments that are offering. Okay, fine, you like the 401k, but however, they are allowing the index UL to be offered through payroll deductions. Why? Because, you know, let's say Bobby that works there today, and he's a happy employee, he's go-lucky, and one day he decided, well, he found a better company that he wants to be go-lucky with, okay? So when he leaves, you know, on the traditional term that the company's offering, he doesn't have anything. You know, with this, it's portability, he can take it with him, right? And he needs money, he can cash. It's self-contribution, doesn't cost the company any money. So it's a great plan, great benefit, even for companies who don't have no benefits, and imagine that we could offer that.
Right, so does that mean that the employee can pay for it themselves out of their paycheck, and the employer not really have to get involved in it?
That is correct.
Wow, that's
we
really
can
something.
basically add to what they're doing already, okay? And, you know, one thing about, you know, if people continue to do what they do with the 401k, where do you think taxes are going to go?
Well, let's not get on that subject.
Yeah, by the time we retire, taxes might be up to 50%.
Yeah,
we don't
that's
know
true.
that.
We don't
but
know.
if that's the case, then the government's taking half of my money that I saved for 30 years. That doesn't make sense to me.
Bobby, I have another question, because I'm sensing that you're in the field a lot. You know, you're doing a lot of financial literacy and everything. Shirley's kind of the boss, so
Of course.
you know, she's cracking the whip and making sure everybody's doing
We're
what they need to do.
We're business partners.
But what happens when you go into a client's home, or if you meet them wherever, and they how hard is it to get them to give up the old way of doing things and move into the new?
I'll tell you, most time when I sit down with my clients, I usually close the deal. Because I'm there to educate them that, hey, it's okay what you're doing, okay? But I have a new way. And when they see the tax advantage and tax-free from this product, okay, and the fact that they can't lose their money, it's a no-brainer after that, you know?
Wow.
And I'm just there to educate them and to show them that, you know what, you have a choice now. Because before then, people just say, hey, you know what, all I have is the 401k. I don't want to play the stock market because I don't want to risk that. Well, I have something else that you could do.
You know, this is a lot different from years ago because you don't come across as a salesperson. I mean, you come across as if you come in and you are there to see what people have and to educate them. And then they make a decision, and not somebody beating them over the head or trying to get them to move into a product that they don't understand, which a lot of people are in situations like that right now. They have product that they don't understand. Somebody pressured them into that. Can you speak a little bit about that?
Usually when I sit down with my clients, I ask them what they're doing, and I try to explain to them what the product they have offers them. Then I go into what other options are out there, okay? So I educate them on both, what they have right now and what they could have, okay? And then they can make the educated decision. Because see, we're a broker. We are not captive where I can only sell this type of product, okay? We have hundreds of companies that we can represent. So I could go into a company and give them a 401k and IRA, or I can show them the new way of the IUL. So I'm not obligated to sell anything.
Right. Well, we're just about out of time. I mean, when you're learning and having fun, time really goes by quickly. Do you have any parting words that you can say in maybe 30, 40 seconds so I can get my closing in?
Well, I say that, you know what, everybody should be able to learn all their options and not be stuck with their old ways. And this is what we do.
Yeah.
Right. Shirley, what about you? Have any
Well,
parting words?
for those parents out there, do you have kids? You know, I mean, if you have kids, have you thought about college education? You know, well, most 529 plan is losing money. Every client that I've spoken with that has a 529 plan has not made money that they've been contributing. Well, have you ever considered utilizing this, you know, as a retirement, not only that, for college funding, you know, being able to tap into the money, you know, and so it's pretty unique product.
Well, you know, folks, I want to take this opportunity to thank Shirley. You've been a great co-host. Pretty soon, you won't see me here. You'll just see Shirley and probably Bobby and other subject matter experts that she'll be bringing to the show. If you want to know more about the real secrets of money and how to protect your hard-earned income and savings through Index Universal Life products, simply email Shirley or contact me or contact Bobby. As the screen is rolling, you should be able to see the email addresses and the telephone numbers. And I want to thank you so much for watching Skills to Pay the Bills in today's segment of The Real Secrets of Money. Have a great week. Bye-bye.